Welcome back. We are on the topic percentages. In the previous video, we solved a practical problem involving profit and loss. In this video, we are going to learn about interest. Let's consider this example. Mr. Samoa deposited 1,200 Ghana cedis in his bank account for 3 years. So Mr. Samoa went to this bank and deposited 1,200 Ghana cedis in his account. The amount of money he deposited in his account is known as the principal. So in this case, 1,200 Ghana cedis is known as the principal. Because Mr. Samoa has given his money to the bank for a period of 3 years, at the end of each year, the bank will give Mr. Samoa a percentage of the amount that he deposited in addition to the amount that is already in his account. Now, this extra money that the bank will give to Mr. Samoa is known as interest. So because Mr. Samoa has given his money to the bank for a period of 3 years, at the end of each year, he will receive a percentage of his principal as interest. So at the end of each year, the bank will give him a percentage of his principal as the interest earned on his money. The rate of interest is given in terms of a percentage. This means that the amount of money that Mr. Asamoah is going to earn as his interest is given in terms of a percentage. So let's say that in the case of this bank, the rate of interest is 10% per annum. Per annum means per year or yearly. So 10% per annum means that 10% every year. Now, if the bank gives an interest of 10% per annum, what it means is that at the end of each year, the bank will calculate 10% of Mr. Samuel's principal, and that will be the interest that his money has earned at the end of the year. Let's consider another example. Mr. Obin took a loan of 1,000 Ghana cedis from his bank for a year. So the bank gave Mr. Obin a loan of 1,000 Ghana cedis. Just as it was in the case of Mr. Samoa, for Mr. Obin also, the amount of money he took from the bank is known as principal. So when someone deposits money in his account, it's known as principal. And when someone takes a loan from the bank, that amount of money is also known as the principal. Because the bank has given their money out to Mr. Obin for a year, at the end of the year, he will pay a percentage of the loan that he took as interest. So at the end of the year, he will pay a percentage of his principal to the bank, and this is known as interest. We already know that the rate of interest is given in terms of a percentage. So let's say that this bank charges a rate of 9% per annum. The rate at this bank is 9% per annum. What this means is that at the end of the year, Mr. Obin will pay 9% of 1,000 Ghana cedis as interest on the loan that he took from the bank. So we have considered two examples here. In the first example, Mr. Samoa deposited 1,200 Ghana cedis in his account for 3 years. In the second example, Mr. Obin took a loan of 1,000 Ghana cedis from his bank. So this is the general practice. Someone will deposit his money at the bank, then the bank will loan that money out to another person. So in this case, Mr. Samoa deposited his money at the bank, and the bank loaned out the money to Mr. Obin. Now, when it's time for Mr. Obin to pay the loan, he will pay the loan plus the interest on the loan. In the same way, when it's time for Mr. Asamoah to go for his money at the bank will give Mr. Asamoah his deposit plus the interest on the deposits. So this is the general practice. Someone deposits his money at the bank, and the bank loan out the money to another person. When the loan is due, that is, it's time for the person to pay the loan, he is going to pay the loan that he took plus the interest. And in the same way, when it's time for the one who deposited his money to go for it, the bank will give him his deposit plus the interest on the deposit. So as we've clearly seen, In the case of Mr. Asamoah, the total amount of money that he will take from the bank will be his principal, that is the amount he deposited plus the interest on his principal. In the same way for Mr. Obeng, the amount of money he will pay to the bank will be his principal, that is the loan he took from the bank, plus the interest that the loan has accrued. There are two basic ways of calculating interest. There are simple interest and compound interest. So in this lesson, we are going to learn how to calculate simple interest and compound interest. Thank you for watching this video. Subscribe to this channel for more videos. In the next video, we are going to learn how to calculate simple interest. Bye-bye.